A lovely afternoon to everyone. I hope all of you are having a great day in so far. This is Miss Kurt welcoming you once again for this week's webinar when where we will be discussing about the virtual asset industry and its regulatory framework here in Dubai. Expanding the virtual asset industry can help to position Dubai greatly as a hyper-connected pro-business city and its ceaseless effort in evolving as a business capital that could greatly support the future economy. With the evident trend of virtual assets such as NFT, cryptocurrencies, and the increased prominence of blockchain technology across a variety of sectors throughout the world, the potential for the virtual asset industry growth is immense. The establishment of Dubai's Virtual Asset Regulatory Authority is a relevant step initiated by the government to regulate the expansion of global virtual assets in the Emirates of Dubai. So, on today's webinar, we will be trying to give light on the specific areas of compliance and risk management, specifically, which the Virtual Asset Service Provider or the VASPs would have to comply with. So, as usual, the first half of the session would be for the discussion of the topic. You may send the question and queries that you have on the message box below, and we will have it addressed to the best of our knowledge on the second half of the session. So, as a pointer for today's webinar, we would be giving an overview of the Virtual Assets Regulatory Authority, or the VARA, its background, objectives, licensing, and the rule books as published, the compliance risk management, audit and reporting, as well as the AML and CFT compliance of VASPs. So the Virtual Assets Regulatory Authority was established in accordance with Law Number 4 of 2022 on regulating the virtual assets in the Emirates of Dubai. As the world's first independent or regulator for virtual asset, VARA serves as a transparent and trusted guiding authority for the emerging world of virtual assets. So the Virtual Assets Regulatory Authority is the sole authority regulating the virtual assets across the Dubai. The scope of supervision for VARA applies to all zones across Dubai, including special development zones and free zones as well, but excluding DIFs. So as per the law, VARA would be affiliated with the DWTC authority as well. So in line with the objectives of the VARA as stated on the mentioned legislation or the law, they have specified five main objectives of this authority. So these could range as point one to boost the competitive edge of the emirate at the local and international level, and to develop the digital economy in the emirate or here in Dubai. So it could also the objective of VARA is also on increasing awareness and encourages innovation on the virtual asset industry sectors, as well as attracting investments and have it based in Dubai. VARA should also provide a framework that would protect both the investors and the dealers on the virtual asset industry, as well as develop regulations and standards for regulating and supervising and overseeing activities related to the virtual assets. So the objective stated is correlated to the function of VARA, which generally would regulate, supervise, and oversee the virtual asset services. As the regulatory authority for virtual assets, VARA should also cooperate and coordinate with the local, federal, and international entities, as well as the private sectors, on all matters related to regulating the virtual assets. So this could include matters on rules and controls, compliances required, permits and licensing, with the view to ensuring the achievement of VARA objectives as presented on the screen. VARA's virtual asset regulatory framework is concentrated on the risks presented by each of the virtual asset activity in the market and seeks to provide VAS with a clear framework of rules which apply to their particular operations and business models, while maintaining a baseline market standard of compliance across core regulatory domains. So in line with VARA's objective and function, they have published four compulsory rule books and activity-specified rule books. So for compulsory rule books, they have published on the month of February four rule books, which are the company rule book, compliance and risk management rule book, technology and information rule book, and market conduct rule books. They have also rule books published specifically for the virtual assets activity, which are the advisory services, broker dealer services, custody services, exchange services, lending and borrowing services, payment and remittances, as well as the management and investment services. So a virtual asset service provider or VASP who wishes to conduct business in Dubai would have to comply with the compulsory rule books and understand the risk involved and associated with each of the risks that the virtual asset activity presents to the market. So now we will be moving on with the licensing process for obtaining a virtual asset license under the VARA. So for the licensing process, they have three categories that they have specified, which are the MVP applicants, legacy VAS, as well as new applicants who would like to conduct virtual asset activity within the emirate. So for minimum viable product or MVP applicants, these are refers to the applicants that are already in the MVP process and would be advised by VARA to either continue within that MVP licensing process or be transitioned to the FMP licensing process, ensuring a seamless transaction with focus on efficiency. So MVP license as of now is no longer being accepted by VARA because this is the one that they have initially followed below before the publication of these rule books or the regulation on the month of February. So for next category, which is the existing local VAS, all legacy or in-market banks that have not been engaged with VARA throughout the MVP process thus far are required to complete the information disclosure questionnaire or the IDQ until 30th of April 2023. So failure to comply with the IDQ will be considered as an intent to not continue the business in Dubai, and therefore completion of winding up of such businesses must be until 30th of June 2023. So for legacy VATs, after their completion of IDQ, entities would then receive an application acknowledgement notice or the AAN, which would state whether they are to be fully regulated or registered with VARA. So entities that would be required for a regulated license or register must conclude their application until 31st of August 2023. So lastly, to discuss the process for new applicants, they have two stages as they have categorized. So the first step is going to be for initial approval, followed by the step two, which is the FMP full license application. Initial approval would include submission and completion of IDQ, which they can submit to Dubai Economic Tourism or the mainland as well as free zone authorities. This IDQ will then be screened by commercial licensing bodies and be forwarded to VARA for further assessment. So if they are given initial approval, they can now proceed with setting up the company like preparation for hiring employees, offices, opening client bank accounts, and etc. So more importantly, VAS is then required to satisfy the detailed licensing requirements as set out by VARA. So this one covers the step one, which is the initial approval. So after that one, they can now move on to stage two, which is following the receipt of the initial approval and after completing all arrangement with regards to incorporating in Dubai, VAS can now submit a full FMP license application to VARA through the mainland or free zone authority commercial licensor, or in special cases may be directly initiated with the VARA itself until such time that they determine the preferred commercial licensor in the SIP. So as I have mentioned, only VAS that received final approval post-review from VARA and received the FMP license are in position to undertake any regulated virtual asset activity or offer such services to or from here in the Emirate of Dubai. So for the next part, we would now move on to compliant and risk management or the compliant and risk rulebook that was released by the VARA. So VAS shall establish and maintain an effective compliance management system or CMS. An effective CMS should cover all aspects of their operation, which involves compiling of necessary documentation and information as well as efficient relay of information from the staff of within organization to their compliance officer, and efficiently implementing program to analyze key performance and risk indicator. So ultimately, they would have to comply with all applicable laws and regulatory requirements and their own internal policies and procedure at all times. So on the compliance and management system, they have mentioned that VAS shall appoint a compliance officer. So compliance officer ultimately is responsible for establishing and administrating the CMS and notifying the VARA and relevant authority for the loopholes in itself. So on these specific rule books, they have specified the exact qualifications that the compliance officer must have to be appointed as the compliance officer of the business entity. So this individual must possess at least 5 years of relevant experience in compliance function. It should be a fit and proper person as approved by VARA, a resident in the UAE or holds a UAE passport, a full-time employee of the VAS, and these compliance officers specifically must report directly to the board. So compliance officer responsibilities would range from nurturing compliance within the company as such that they are responsible for giving enough training to the staff and senior management within the organization. It could also include like developing and implementation of policies and procedure, reporting compliance activities and audits, as well as proposing corrective actions if there is any findings on the loopholes for the policies and procedures that is being implemented in the company. So under compliance management system, there are basically two policies and procedures that the company must have. So this could be in relation to risk management as well as operational policies and procedures. So as for this, a VAS must have a risk management function within the organization who will be monitoring the risk management related policies and procedure. The risk management function should consist of a sufficient number of suitable and qualified experienced staff. So these policies and procedure are subject to ongoing comprehensive review when there is a material change in the vast business or operations or senior management or staff, or to the market conditions and applicable laws and regulations that may affect the risk exposure of the past. So they have also mentioned that for risk management function, there should be a head of risk function, which could also be like the compliance officer of the company. So the head of risk management function must submit risk exposure report to the senior management or to the board. So this risk exposure report should be done on a quarterly basis or more frequently depending on the transaction and the size of the virtual asset service provider. This kind of report should specify four risks under the transaction or activity that they are undertaking. So these are the financial stability risk, which identifies actual and potential risks for financial soundness, market risk, credit risk, and liquidity risk. So the next one that they have specified is for market conduct risk, which could refer to risk for business strategy, client onboarding, organization and regulation, operational, manage and corporate governance, as well as relationship with the regulators. So the head of the risk management function should also identify compliance and risk management related risk, which is in relation to AML and CFT market abuse and fraud, outsourcing and counterparty risks, risk management systems, compliance function and arrangement, business continuity as well. So the last risk is in relation to consumer protection. This could involve the communication with clients and financial promotion, legal risk, disclosure, and reporting client acts. So on the other hand, as I have mentioned, there should also be operational policies and procedure in place in the company. So operational related policies and procedures includes like proper handling of information from staff to compliance officer, the integrity of their dealing practices, and maintenance of proper records and reliability of information in flows thereof. So as what is mentioned, it would be including like regular exchange of information with their clients, group, and counterparties involved on the transaction, as well as like the treatment of client in a fair and professional manner. So compliance by VAS and all this stuff would also be enclosed on the operational policy and procedure. So meaning to say, they should ensure that employed staffs are or qualified individuals to perform their duties and are well equipped or well aware with the up-to-date information of their policies and procedure through continuous training that they would be conducting. So this training could be in relation to operational policy and procedure and as well as the AML and CFT related trainings. So they have also mentioned that newly hired staff must be aware of the operational policies and procedure within 30 calendar days upon starting their employment. So VAS shall keep their books and records properly in their original or native file format for no less than 8 years and should furnish a copy to VARA. So such records may include but is not limited to proper audit trails for all transaction like transaction details, amount, date, and payment instruction so as to enable carrying out necessary reporting such as SAR or STR. So it could also include like client information like the CDDs being done, KYCs and KYB, the general ledger containing all assets and liabilities of VAS, and communications and documentations such as like if there's any conflicts and complaints being filed by their consumer as well as transaction errors. As for the rule book that was released as well, VAS must conduct both external and internal audit. So VAS shall appoint an independent third party auditor to perform an audit of the financial statements of the VAS in order to make available an annual report and promptly notify VARA of the full name and contact details of the auditor upon appointment. So VARA may also require VAS to appoint alternative auditor if their original auditor is deemed to be inappropriate for the size and complexity of their business. The accounting information shall be prepared in accordance with the generally accepted accounting principles. So on the other hand, for internal audit, VAS shall establish and maintain an objective internal audit function, which shall be independent of the operational function and submit regular reports directly to the senior management. So internal auditor could perform audit work regularly and at least on a quarterly basis. They must also inform the senior management of findings and recommendations as well as follow up with and resolve matter or risks highlighted in the relevant reports or findings being submitted to the senior management. Now, moving on with the reporting necessary for VAS to submit to the relevant authority or to the senior management, there are monthly, quarterly, and annual report that they would have to comply with. So for the monthly basis, they have to prepare financial statements such as their balance sheet and a list of off balance sheet items, their statement of profit and loss, income statement, and cash flow statements. So they must also do a report on addresses of their virtual asset wallets, as well as the list of group entities for and portfolio in virtual assets. So this can include like transaction records, including but not limited to loans or any transactions involving virtual asset activity for which the VAS is licensed. And lastly, their transactions with related parties must be documented as well. So for quarterly basis, they would have to prepare the minutes of board meetings, a statement demonstrating compliance with financial requirements, financial projection, and strategic plans, and the one that I have mentioned before, which is the risk exposure report. Annually, VAS must submit audited financial statement, senior management assessment on the VAS compliance, documentation and client onboarding, which could include actual documentation of the first 100 clients onboarded for that specific relevant year, as well as the group structure chart of the VAS. So this could be like the UBO board, senior management details, independent director details as well, and details of board meetings held by the entity. So like how many board meetings and the attendees and minutes of that meetings as well. So in addition, VAS shall notify VARA of any changes in the information as provided on the report and any criminal or civil action, charge or proceeding or investigation made against the VAS. So for the last part, we'll be discussing the compliance of VAS in relation with the AML or anti-money laundering and combating of financing terrorism. So the FMP regime is structured around ensuring that anti-money laundering and combating the financing of terrorism compliance standards are met in accordance with the Financial Action Task Force recommendation for virtual asset service providers. So on this specific rulebook, they have also specified that VAS must appoint as well an MLRO or money laundering reporting officer. So MLRO could also be the compliance officer of the company. So the main responsibility of MLRO is to oversee and ensure effectiveness of AML CFT policies and procedures and act out relevant responsibilities as required. As for the qualification, this individual must possess at least 2 years of experience in handling AML and CFT matters, and again, should be a fit and proper person or a qualified person to perform these duties as they have specified on the rule books. So the responsibility of MLRO is almost the same as a compliance officer. It's just that MLRO specifically is dedicated to the AML and CFT of the VAS. So again, the responsibilities could include like nurturing of compliance within the company, developing and implementation of AML CFT policies and procedure, conducting risk assessment, and like reporting requirements as well, such as suspicious transaction report or suspicious activity report. The MLRO should also do quarterly report to board, which includes like the effectiveness of policy and procedure, any failures or finding for corrective action in the policy and procedure, as well as non-compliance with AML laws. They must also prepare a summary of all anonymity enhanced transactions. So VAS are mandated to prepare and implement a robust policies and procedure to comply with the AML CFT requirement. So they must on that policy and procedure, they must also establish courses of action which referring conducting any financial or commercial transaction under an anonymous and fictitious name. Maintenance of all records, documents, and data for all transactions, whether local or international, should be specified as well on that policy and procedure. So this policy and procedure should be in accordance or in compliance with the AML CFT law and requirements, and shall provide adequate screening rules, such as knowing the identity of the client, the UBO, virtual asset transaction, wallet addressee, and targeted and financial sanctions. So this policy and procedure must be attested by a competent third party and must be submitted to VARA during the licensing process. So any changes must be notified to VARA no more than 21 calendar days. So within the policy and procedure, the company must have AML CFT controls, risk assessment, client due diligence, as well as STR or SAR submissions. So for the AML CFT controls, in line with the policy and procedure, the VAS should have an effective controls and system in place. So this could refer to distributed ledger analytic tools, investigative tools, as well as screening system that the bank have on their organization or entity. So the VAS shall also review the capabilities and weaknesses of such tools and design controls to monitor the client's interaction with their virtual asset activity. On the other hand, for the risk assessment, so in implementing adequate and appropriate AML CFT policies, procedures, and controls to detect and prevent illicit activities, the VAS must conduct AML CFT business risk assessment. So this is for them to understand or to have a better understanding with their risk exposure as such in relation to the anonymity enhanced cryptocurrency and anonymity enhanced transaction. So if the VAS would be having these two kinds of transaction like anonymity enhanced cryptocurrencies and transaction, they should do an enhanced CDD for that kind of transaction, which shall be verified every 6 months. Within the policy and procedure, VAS are also required to undertake CDD measures to verify the identity of the client and the UBOs before or during the establishment of a business relationship for the purposes of providing services relating to virtual asset activity. Or CDD could also be done before executing a transaction. So the CDD shall include as well auditing transactions, data, documents, and information obtained are up to date and appropriate, and on cases where an entity is acting on or behalf of the direct clientele, they should ensure the identity of that intermediary or authorized person of the direct client. So failure to conduct a proper CDD for that client, the VAS shall not pursue with the transaction or build a relationship with the client as well. So lastly, for the reporting, which refers to STR, STR must be made upon suspicions or reasonable grounds to suspect that the proceeds of the transactions are related to a crime. So this could be done with the help of placing a proper indicators within the organization. So the MLRO must submit to both FIU and VARA through the GoAML portal this kind of suspicious transaction report. So any additional request from the regulatory authority must be done within 48 hours upon receiving such request. Moving on with the FATF rules, the VAS shall understand the risks associated with the deposits or withdrawals, non-obliged entities, and anonymity enhanced transaction. So prior to initiating any transfer of virtual asset with an equivalent value exceeding 3,500 AED, The VAS must obtain and hold required and accurate originator information as well as required beneficiary information and make it available on request to VARA or other appropriate authority. So the information may include, like for example, the name, account number, or virtual asset wallet address, and residential or business address of the originator as well as the beneficiary. So a VAS will be required to demonstrate to VARA how they will be able to comply with the FATS rules travel rules during the licensing process. So lastly, in relation to the record keeping for AML and CFT purposes, virtual asset transaction records, including operational, statistical records, documents, and information concerning all transactions executed or processed by the VAS, CDD records, including records, documents, and information about the clients, and information relating to third parties engaged by the VAS to under the CDD, as well as records relating to ongoing monitoring of business relationship with clients, such as suspicious transaction report made in accordance with the law or compliance rulebook, must be maintained within the VAS for no less than 8 years. Okay, so that's it for the discussion of compliance and risk management for the VASPs for today's webinar. So you may now send your questions on the message box and we will have it addressed after 5 minutes. Ang haba din pala, no? 30 minutes din ako nagsasalita. 37. Okay, so for the first question from Miss Elena, DAFC will be regulated by VARA. So as I have mentioned a while back, VARA would be the regulatory authority for virtual asset, excluding DAFC. So no, DAFC will not be regulated by VARA. So the next question is from Amit. We have received notification to apply for FA license. And how do we go about applying for the license? So I believe that your company is already in operating or currently doing the virtual asset activity already. So as I have mentioned for legacy VAS, they would have to do first the information or submit the information disclosure questionnaire or the IDQ, which could be obtained from the relevant commercial licensing authority. So after the submission of IDQ, the entities will then receive an application acknowledgement notice from VARA. Then after that one, obtain the necessary approvals or permit from the VARA as well, or proceed with the regular licensing process for the FM. So for this one, you could also directly contact us so that our business advisor can guide you accordingly for the licensing process. Please let us know if there's any questions or queries that you would like to have us address. You may message it on the message box. So I think there's no more questions that is being asked right now. So I think that's it for today's webinar. We'll be wrapping out right now. So I would just like to have this chance as well to announce that we would be conducting a series of or a collection of webinar for the following weeks to discuss specifically on the explanatory guidelines with regards to corporate. So to be posted on the topics that would be discussed, you could just scan the QR code as presented in the screen, so it would take you to our social media links. So we hope to have you once again next week on our upcoming webinar. Have a nice day ahead.